Hi, everybody. Michael Matherly, Senior Vice President of Global Compliance here at BUPTI. And this is another episode of the Future of Compliance. Who'd have ever thought that there would be a podcast about compliance? Well, you're looking at the screen of two individuals who are super excited about the conversation around compliance. And I'm excited today because we expand beyond what we typically think about when we think about IC compliance, which is misclassification or even taxes. Today, we're going to be talking to a very special guest about freelancer insurance. That's part of the compliance picture that we all need to be aware of when engaging and managing freelancers. So it is with my great pleasure and high honor to introduce an old friend, a cohort of mine, somebody who has taught me a lot about the insurance business, someone I consider a mentor, someone that has really helped me out in finding this current role when I moved over to BUPTI from my prior role. And I'm just super excited to be able to have a conversation with my good friend Fitz Ventura. He is co-founder, along with his brother Ray, of 1099Policy. And because I say this all the time, because it's always true, the guests can do a much better job of introducing themselves than I can. So Fitz, I'm going to turn it to you. Tell us about yourself. Who are you? What do you do? How did you get here? And how the heck are you, my friend?
Wow. Well, thank you for that super kind introduction, Michael. It's always great to catch up with you. There aren't too many people that I can geek out with along the lines of compliance. You're in that bucket, so it's wonderful to be here, really. Um, yeah, 35-year insurance veteran. I've spent the better part of that time building insurance programs for companies in the staffing ecosystem. Uh, of course, I've had the pleasure of supporting a program or two for you. Um, I am fond of saying that insurance is my romance language. It's weird to say, but it is true. I have my undergraduate degree in risk management, and the reason why that matters is because it really does speak to how I've experienced this journey over my professional career, which is helping our clients solve challenges
Yeah.
as they've arisen. And today we do that vis-a-vis 1099 policy in some very innovative ways that we'll talk about. But it all comes from helping our clients really solve challenges that they're facing.
Yeah. When you were in the insurance biz prior to this startup of yours, what were you doing? What were you focused on?
Yeah, so the truth of the matter is that I still actually own a proper risk management firm that I'm very proud of called Leading Risk.
Yeah.
Um, that firm acts as a broker risk manager for lots of private companies that need counsel along all things risk management.
Oh, great. And what, so this is a product. 1099 Policy is effectively a product and now a brand and a solution. How did that originate? I mean, what led you to think of that? Was it some past customers that you were advising that it kind of dawned on you, or is this something that you just saw as a gap in the offering? Tell us a little bit about the origin story of 1099 Policy.
Yeah, so a good friend of mine, Jeff Wald, who if you haven't had a chance to speak with or connect with, I'd highly recommend, was
Yes.
building out a platform called Work Market. And in the very early days, they had an enterprise client come to them. They needed something like 1,000 freelancers for any variation of field-centric IT support work. And Work Market was this wonderful company. It had at the point something along the order of 125,000 freelancers, in the pool, but very few of them actually had the insurance that this particular enterprise client required. And so it was a barrier for them. Jeff came and asked us to create something that could serve as insurance on a per gig basis. At the top of that requirement was workers' compensation, general liability, errors and omissions coverage. We were able to create what was a very novel solution for them, and that helped them effectively land that enterprise client and then many others thereafter, all of whom wanted to avail themselves of the freelance labor pool, but also needed to conform to their internal risk management and insurance requirements. And so that was the genesis for 1099. It started off being a solution for that client that really helped fuel some of their growth.
Yeah, what a great customer and a collaborator to have in Jeff Wald. I don't know him well, but I did have a good conversation with him when my partner and I, we'd started IC PreCheck, and we talked to
Yeah.
Jeff about what he was doing in the freelancer space, and he was very encouraging, and I could tell that his wheels were spinning. This was back in 2017, 2016, maybe even. About kind of taking the IC PreCheck and making it mobile to go along with the freelancer wherever they went from client to client, instead
Mhm.
of it being a client-based service or certification. So, that has a separate story. So we'll share that another time.
Yeah, for sure.
But great. So, Fitz, tell me, how do you work with your brother Ray? I know you guys have started hiring a few people in the last 6 months to a year.
hmm
Tell me, what's the growth prospects for 1099 Policy look like, and how do you and your brother work together?
Yeah, I think it's a superpower, to be honest with you. I'm very fortunate to work with my brother. He is without a doubt the smarter of the two. He has an engineering background. He runs the engineering side of the house. I run the insurance team. So the engineering side is based out of San Francisco, and the insurance operations are based out of New York, though we have employees in several countries at this point. Um, it's as a technologist, I think Ray brings a particular perspective to the table that is all about efficiency, what works well, what's going to help uh, talent get through the onboarding process quickly. Um, we are an API first platform, and so the entire architecture of the program really is uh, sort of a byproduct of how Ray and his team have developed it and the vision that they've brought forth. And thankfully, we're now integrated into numerous strategic partner platforms, and so yeah, it's working. It's working wonderfully well.
Yeah, I won't get in between the two brothers on which one's smarter, but I will say that when I talk to you about insurance, you blow me away. And I remember my interactions with Ray in our past projects together. Yeah, he was super smart and definitely taught me some things on the API and technology side. So this is a good segue, Fitz, to give you kind of the opportunity. Describe for us what 1099 policy is. It's a technology. I think you'll probably lead with. But tell us a little bit about the solution and how it supports not only the enterprise customer, but also the freelance market. Can you do that for us and take some time to really give us some detail?
Yeah, sure, and thank you for the opportunity to do that. So we are a tech firm. We provide what we refer to as fractional insurance for the gig worker. But we really do that within a B2B to C model, so to speak. And what I mean by that is take Adobe as an example. Adobe may source 1,000, 2,000, 3,000 freelancers over a particular period. And Adobe might very well require that their freelancers have a set of insurance requirements as a precursor to sourcing the job. And so what we do at 1099 is we make that insurance easy to source if the contractor doesn't already have it. We eliminate that barrier for the contractor, whether it's a cost barrier or an access barrier. They no longer have to go off platform to get it. We make it available to them through a strategic partner like Bupty, frankly,
Yeah.
because we sit at the checkout counter. And we sit at the checkout counter making sure that if someone is taking an assignment with Adobe, or if someone is taking an assignment with Microsoft, or if someone is taking an assignment with Nike, that they get exactly what they need in a compliant fashion, and that all of that is done cost effectively, but really, really quickly. The insurance is sourced in under 45 seconds as part of the onboarding process, and thereafter, it's really evergreen. So every time that the contractor comes back, if they don't have what they need and they're taking that Nike assignment, we can give them exactly what's required. In
So
that way,
if I apologize for the interruption, but if I'm hearing that correctly, that means that once a contractor is onboarded within a program, say Nike, and they have made application to 1099 policy, they can go and carry that insurance coverage from project to project, assignment to assignment. And if there's an assignment that doesn't require, that Nike or the client doesn't require coverage on, it'll fall off, right? It won't be applied. Is that correct?
that's exactly right. That's exactly right. And so take our partnership with Bupty. The way that it's intended to work is the solution sits at the checkout counter. The contractor is vetted by the compliance team. They're ready to be deployed, and they don't have the insurance that's required. We'll provide that for them by way of our API connection, because we sit in effectively the Bupty stack, and that all happens within milliseconds, so that the contractor can go out and we can go back and say to the enterprise client, yeah, John Smith has exactly what you need in order to source that job.
And because of the integration with a platform like Bupty, and you work with other platforms, it's not just Bupty,
Mhm.
you get what you, correct me if I'm wrong, you get what you need about the freelancer and the assignment from that platform so that you can effectively make application on their behalf and have that 45-second decision. Is that right?
Yeah,
Or do you need to take additional information from the worker?
that's exactly right, Michael. So the beauty of the integration is that we get everything that we need through that relationship. We know
Yeah.
exactly what the job is. We have a sense for when it's going to start and when it's going to end. We know what the contract value is. And so we take that information in, thereby significantly shortening the underwriting process that would otherwise exist for that contractor if they had to go off platform. And that's how we're able to effectuate coverage for them within seconds.
That's great. So if we were to create a small list of the benefits to the freelancer of your service being available through one of their clients, would it be fair to say that quick decisioning is one of them?
Mhm.
Um, uh, Fractional insurance, meaning they only have to buy the insurance for that particular project for which they're being required to get it. And that's important because other insurance policies or options they might have would require a quarterly or an annualized policy that would apply against everything, but a lot of it may go to waste because not all of the freelancers' clients require insurance coverage. Are those kind of the lead benefits for the freelancer that you see, or are there any others?
Yeah, so those are certainly some. Here's another way to think about it. If a contractor works for an enterprise company today that requires A, B, and C, and next week they work for another enterprise company that requires D, E, and F, quite often the contractors have to buy all of this unnecessary coverage. They effectively have to buy to the largest common denominator, right? And carry that cost with them throughout the year in order to satisfy these future assignments. So it's we've issued coverage for contractors as low as $6, believe it or not, in certain jurisdictions. And I'm not suggesting that that's the cost of coverage for everyone, but gosh, that's a heck of a lot better than a contractor having to spend $750 or $1,500 simply to source work. It's asynchronous to how we think about work today.
Yeah, no, and as a past independent consultant, freelancer, and somebody who does a project every now and then off the side of my desk, that is much appreciated because it was very difficult to go out and get that heavy annualized policy just for one client. So thank you for bringing that
Yeah,
that
yeah.
benefit and that ease of access to just the right insurance to the market. But you touched upon by saying that you've had policies as low as $6. It begs the question, where do you make your money? How does 1099 policy return some favorable returns to your investors, to yourself?
Yeah, great question. So we're a SaaS-based company, right? There is a license, a platform access fee, as we refer to it, that sits as part of the base offering, and that's really what effectively helps pay the bills, contract the engineers. They are expensive, and allows us to provide the necessary support, scaffolding, to be of service to our clients. Our primary goal, of course, is to drive the cost of the coverage down, because what we want to do is just simply eliminate barriers for the labor pool to work. Um, and the better that we do that, the more aligned we are with our stakeholders, who are our strategic partners, of course, the enterprise clients, and without a doubt, the individual independent contractor, freelancer.
No, love that. And so now let's look at the list of benefits or value adds to the enterprise when your service, when your access is part of their freelance management program. I'm assuming one, still the quick decisioning. Two, it makes it easier for the freelancers. They want to get the coverage the client needs or wants. What other benefits do you see that the enterprise yield from your solution?
Yeah, so uh, the largest beneficiaries, honestly, of our innovation are the enterprise clients. And here's why. We support a client that has about $40 million of freelancer spend through our program. Now, this is a client that cares about compliance, right? They have vendor requirements. And historically, this particular client has had to reroute that $40 million of spend through their strategic EOR partner. And we love our EOR partners. They do a wonderful, wonderful job, and they add absolute value. Um, but this was an instance where the only reason why that talent was being rerouted was because insurance and compliance around insurance was very, very difficult and filled with a lot of friction. So for that enterprise client, what they were able to do was effectively uh, save what was something around 15 to 20% on the cost of that labor, and redeploy those resources in ways that they sort of were able to reprioritize or or would have preferred. And so when we think about the benefit to enterprise clients, we think about it as um, delivering strong ROI through that lens, helping them expand their freelance labor pool, preserving the speed to market, the agility with which they can deploy talent. There's nothing worse for a hiring manager or a project manager to have the talent that they need, but sort of be stuck at the gate and not be able to deploy that talent because they've got to go off platform to get their paperwork in order and then come back. And insurance is part of that, right? So we've accelerated the speed with which talent is deployed. And lastly, we've mitigated risk. Um, we've seen our fair share of claims that come through that would have or could have otherwise been uninsured and impacted the balance sheet, right, of that particular enterprise company. So we see the value for enterprise companies along many different fronts. Of course, from the IC perspective, what they know is, oh my gosh, this is super easy to do. I can get to work and solve my insurance issues in under a minute, as opposed to it taking weeks and being very filled with friction. Yeah, so value across the entire channel for sure.
Yeah, I can remember when you and I first started talking about this, maybe 3 or so years ago, for the first initiative we worked on, and kind of doing the business case together for the enterprise, the ability to avoid going the EOR route. Again, we have EOR partners. We love them. They play a certain place in the compliance continuum. Absolutely. But it is a more expensive engagement model for enterprises to use to get the talent they want. So, and your example is a good one, because I've known a few organizations who simply route their freelancers to the EOR, to the W-2 contractor in the U.S. channel, simply to get the insurance. And the cost, the premium that they pay to do that, is returned in decent multiples when they have access to the kind of fractional insurance that you're making available to them. And the business case really, I recall the one that you and I did together. It was a teaching moment for you to get your new partner, Michael, up to speed on how this works. And I'm much appreciative, and I learned the lesson well. But it's a powerful business case example to do. And I would encourage others who are thinking about it to kind of run the numbers. Especially if you're an organization.
What's interesting about that, Michael, is that the person that helped bring us together was in fact a really like wonderful human being who runs an EOR platform, and they saw this partnership really as simply doing the right thing for the ultimate client with the $40 million of spend, right? That client was going to engage with freelance talent. And the EOR partner at the time basically said, hey, we're going to add value to this relationship. We're going to support that client, and we're going to help them engage with the talent that they're otherwise going to engage with in a way that at least can be moderated and curated and frankly provide some safe harbor for the client, which is really, really important, I think.
Yeah, I think so as well. And, this conversation reminds me of the first time I was introduced to fractional insurance. It wasn't through your company, it was through another company that I won't mention, although I guess I don't mind mentioning it, Bunker Insurance. And it was with a prior consulting client of mine, Shortlist,
Hmm.
our friend Joey.
Yeah.
And we managed a large account that needed an AOR. The business models was built on engaging freelancers as independent contractors. And one of the challenges was they really needed to have some general liability insurance in place and something like workers' comp. And so what was available at the time, and this was back in 2016, 2017 as well, was employer's liability, which is a different kind of coverage than workers' comp. I know that now thanks to your teachings. Uh, but the reason I'm mentioning this is because, go ahead,
If I may, I
please.
think what you're referring to, and this may be part of the edit, is occupational accident coverage.
Okay, it may be. Yeah.
Yeah, yeah.
I thought I remembered it as employer's liability insurance. Uh,
Well, I'm going
but
to put
I,
on
yeah,
I'm going to put on my insurance geek hat here
yeah,
for a second and revert to the nutty professor. Uh, so workers' comp and employers' liability are two things that go together, and fractional workers' comp and employers' liability had not existed prior to our innovation, and so the alternative, the stand-in solution had been occupational accident. Yeah. So
I,
that's the
I
history.
will.
Yeah.
Okay, I will correct myself. And but the point of the story is still the same. So this one client required the occupational hazard insurance to be for their independent contractors that we were engaging as the agent of record. Now, the way we structured that, Fitz, was to uh, take the units, the driver of the compensation for the independent contractors, which we were managing in the short list tool, and then we go out to the client, get the funding for it. The funding would be made available, but before we distributed payments to the independent contractors, we withheld the amount of the premium for that insurance coverage. Now, that's not how you do it now in the solution that 1099 policy has. But that's how it was done back in those days. I guess I say
No.
back in the day, even though it was only
Yeah.
eight,
Yeah.
9 years ago. Tell us about the challenges with doing it that way, meaning extracting it from the contractor's pay. And I realize that we're not a broker, we weren't a broker, so we were probably pushing the envelope, if not sealing the envelope completely by doing so. But I'm okay with that. It's history. So tell us today and talk to us about how do you collect the premium, whether it's $6 or $60 from the contractor.
Yeah. So we begin with this notion that vendors are required in most vendor agreements to come to the table with their own insurance. And the thing of value that's being provided is the ease and the affordability with which that required coverage can be secured because of our embedded tech. So the contractor pays for their insurance because it's in their name,
Yeah.
right? And they do that at the checkout counter. But instead of buying an annual policy, what we allow them to do is simply source the coverage for the 2 hours, the 2 weeks, or the 2 months that is the length of the engagement and pay for it accordingly. And because we know exactly what they're paid or when they're being paid, there's also an option for them to pay for it as they go. So there isn't even this notion that we have to deal with necessarily where the contractor has to lay out money in order to get the insurance that they need in order to source the job. When the strategic partner is also doing payments, we're able to actually provide that additional feature, which is, I think it really enhances the onboarding journey for the contractor.
Yeah. No, thank you for going into that. And that payment by the contractor for their insurance, as you recall, was one of the big mental blocks that I had in understanding, because from an IC compliance perspective, the contractor has to pay for their own insurance.
Yeah,
It's a bit of a red flag if somebody
yeah,
else is paying for it. So and that's, I can remember kind of the phone conversation. Oddly enough, I was driving down Interstate 64 from Charlottesville to Richmond when you and I had this conversation, and I remember, my simpleton's light bulb going off, saying, "Oh shit, pardon my French, uh, podcast audience. But hey, this is a really cool product, and I think it's got legs.
yeah.
Let's keep working with this guy Fitz, with the rock star name, and make something out of this." So that's a, it's a single point, but it's a really important one for those in the IC compliance classification business,
Yeah,
to
yeah,
recognize.
absolutely, absolutely. It's an important point of distinction. If you were remodeling your home and you hired an electrician or a roofer, you wouldn't expect to provide that contractor with the insurance that they're supposed to have, would you? Well, it works the same way in larger commercial models, right? If you are the independent business that you say that you are, then show us that you have your insurance. Now, that is a little different than making it easy for that labor pool to get in ways that are innovative, in ways that are synchronistic to how work is sourced. I say that insurance is, and the history of insurance is something that we can talk about for hours and hours, but it's this wonderful economic engine that really has allowed business to blossom as we understand it today. The challenge is that you've got a bunch of old guys like me that are sort of still dealing with insurance and the tools around insurance as if we were in a 19th or 20th century labor market. And in fact, we are so far beyond that there's a wonderful opportunity to modernize that process.
Yeah.
And that's really what we're doing at 1099. We're fractionalizing it. We're making it part of the onboarding process. It sits at the checkout counter. We're making it easy to pay for, so that it can continue to be a source for growth and part of the economic engine, and not a barrier.
Yeah,
But it
absolutely.
should very well be in the contractor's name. And then
Totally.
all of those other features should certainly exist. Yes.
Yeah. Well, I'm going to ask you to kind of do your masterclass on the distinction between workers' comp and general liability, how they are structured differently by the insurance commissions, I suppose,
Mhm.
and the
Mhm.
underwriters, so that general liability lends itself well to fractionalization,
Mhm.
but workers' comp not so much so. And you had given me the example in the past, and I want you to expand upon it. But just so you know what I'm talking about, where somebody might get a workers' comp policy through you for their IT work that they're doing for Nike or any other enterprise, but if they're also a roofer on the weekends and they fall off the roof, they can use that exact same policy to file a workers' comp claim. One, validate that my memory's not doing a disservice to me, and two, expand on that a bit, the difference between workers' comp and general liability in that regard.
Sure. So before I differentiate workers' comp from general liability, let me take just a step back and differentiate workers' compensation from occupational accident. And you'll see why in a second. The barrier, the gold standard is workers' compensation if you're an enterprise that is concerned about being sued when your contractor is injured on the job. And that happens all the time. Sometimes the injuries are minor, and sometimes they're really serious and horrific,
Yeah.
right?
Yeah.
And so the challenge has been that workers' comp, because it pays for lost wages, it pays for medical bills. There are these things that are called indemnity payments. If you lose a hand, a finger, you're entitled to X amount. It just hasn't been available on a per gig basis. These policies have only been available on an annual basis. And so the default was for companies to make available occupational accident, which provides what I would refer to as skinny benefits. And something was better than nothing, right?
Right.
But what occupational accident doesn't provide is safe harbor from the claim that that injured contractor will make if and when they are seriously injured. Only workers' comp provides that safe harbor, which is why in most vendor agreements for most enterprise companies, you'll see workers' compensation as the top requirement. The legal teams, the risk management teams, the procurement teams understand that if that contractor has workers' comp, then they can't sue that enterprise client for those workers' comp benefits which they already have in their name.
Yeah.
I'm fond of saying that everyone is an independent contractor until they seriously injured themselves. And if they don't have workers' comp, then they seek it. So what we see is this transition, this evolution from occupational accident to workers' compensation because it is now available on a fractional basis. And we are first to market in having created that solution. We're very proud of that.
Yeah. That's
Now,
great.
the vendor agreement also typically necessitates that the vendor come to the table with general liability insurance. While workers' compensation pays for the injury that is sustained by that individual contractor, I'll give you an example of what general liability pays for. We had a contractor that was installing low voltage audio video equipment in a really, really expensive home here in Westchester. They did something silly. They took a screwdriver and kind of like shimmied the wire through a pre-drilled hole, and at a later point, the house caught fire, and it was a $5 million claim. The entire house went up in smoke. And the cause of that fire was this wire that this field contractor, this IT guy, had sort of, installed, right? And so general liability pays for that sort of thing. It pays for the property damage, the bodily injury to others that may be caused. And that's why quite often it's the second most ubiquitous requirement in these vendor agreements. And it's important to coordinate the two, Michael, because quite often, if you have one and not the other, you really haven't insulated yourself well enough as the enterprise company. And by the way, if you're the labor provider in any way and you're retaining any contractual risk associated with sending out that contract. So if you're an AOR firm holding any kind of contractual liability, my gosh, you're really putting your entire company's balance sheet at risk because these claims occur and they occur all the time. And so you want your contractors to have workers' compensation and general liability insurance, and you want them to have it as economically, as easily, as expediently as possible so that you can deploy your labor pool to do the thing that they're intended to do, which is work.
Yeah, absolutely. And as a practice, We obviously look to our clients' flow down requirements with regards to insurance on any contractors that we engage on their behalf. But where the client doesn't have it for whatever reason, we do our own internal determination to determine, do we want or need
Yeah.
insurance on this contractor and that activity. So very much part of the chain of responsibility. So we
Yeah.
need to protect ourselves in doing that.
Michael, we talked about the value to the individual contractor and the value of what we do for the enterprise company. But what we didn't talk about is the value that we provide to our strategic partner. So you take
Why
that
don't we do
AOR.
that now? Good,
Yeah,
good point. Yes.
because you raise a really good and often ignored point, and it's because you understand this space so well, right? When an AOR, as an example, decides to
And
retain.
time out. Agent of record, for those don't follow the acronym, agent of record is what AOR is, and it's when a third-party intermediary, a company like Bupty Services that I run, we engage an independent contractor on our client's behalf. We're not a staffing firm, but we are an agency who engages the talent and places them at to do work at our client. That's what an AOR is.
Yeah. And Michael, it's fair to say that as an AOR, you retain a certain amount of risk, or you
Yeah.
could retain a certain amount of risk associated with the placements of that talent and that work.
Yes.
Right.
Absolutely.
Yeah.
Yeah, no,
So,
despite our contracts and despite our acknowledgments and despite our conversations, both on the enterprise side, client side, and with the freelancers.
yeah. And I was speaking generically, right? As in what AORs are quite often required to do, which is retain some risk. So,
Yeah.
y- y- you know, it's important for us to de-escalate that risk for our partners,
Sure.
right? Um, we look at each of those placements that don't have the insurance that the enterprise client requires as uncapped and unaggregated risk points. And we call that out to say that there's a large amount of self-interest in our partners de-escalating that risk. And yes, if you can de-escalate the risk, expand the labor pool, increase the spend through the channel, and help the enterprise client access the talent that they need expeditiously, then that's a win-win-win across the board.
Of course. Of course. Um, so you touched upon a lot there, and I hope the audience is appreciative as I am to learn about insurance relative to the freelancer population. It never ceases to amaze me how real the risk is, and how important the role insurers like yourself play in this end-to-end engagement of the fastest growing segment of the contingent workforce population. So super glad that you and 1099 Policy are gaining some traction and bringing this to the market. One thing I did want to touch on before we got away is, and you hinted at a couple of them. The Oftentimes we think about the risk, right? When my marketing department does IC classification campaigns, we really highlight, hey, penalties, fines, back taxes, back benefits. That's the risk that you're exposing to. But when we're talking about insurance for the freelancers, give us some real life examples of claims that have come through these fractional
Mhm.
coverages that you've provided. I want to make sure that our audience recognizes that this isn't just a box to check. This is a real protection, real risk to be aware of.
Yeah. So you guys do you and your team, you do just a great job of assuring that contractors are properly classified. Um, and to be clear, insurance and the procurement of insurance does not negate the need for that process. It's an
Absolutely.
important process that has to exist. Our point is a byproduct of that. You can do all of those things really well. And if I'm a contractor that gets injured on the job and I need a $200,000 back surgery, it's going to invite litigation. And the only way for me as an uninsured contractor to access workers' comp benefits if I don't have my own is to try to argue that I should have been an employee
Yes.
of the AOR or of the ultimate enterprise client. And so that's why we say, everyone's an independent contractor until they're injured on the job, right? And then it's like, hey, where are my benefits?
Yes.
Assuring that the contractor has what the vendor agreements very often require is just good business and closes the door on litigation. It closes the door on that contractor raising the question to the workers' comp board, to the DOL.
To the
Hey,
court.
to the court, should I have been an employee? Have I been misclassified? And of course, the danger in even seeding that discussion is that if it applies to that injured contractor, then of course it might apply more broadly to other similarly situated vendors and
Yeah.
contractors, right?
ab-
So,
Absolutely.
yeah, we want to make sure that we conform to the requirements in the vendor agreement for very practical reasons like that. Above and beyond that, Michael, we saw a swell of activity during the pandemic when the regulations throughout the country really changed.
Yeah.
And suddenly, things like COVID-19 became compensable work-related illnesses.
Yeah.
That had not been. We see the more obvious claims where someone, it's difficult to describe, but we've seen folks that have lost a leg,
Yeah.
in a warehouse, right? We have, you can simply open the trade journals or do a quick Google search and hear that some really well-known companies that provide last mile delivery services are experiencing a bit of blowback because those contractors are being assaulted
Yeah.
when delivering those packages. They're being robbed, right? And so absent insurance, there's this public sentiment that perhaps these folks should be reclassified. So we see it there. More interestingly, we've seen a new trend which relates to trademark and copyright infringement. A famous case a couple of months ago, well, not famous, but a well-known case where Sony sued the Marriott Corporation. Public knowledge, you could just simply Google it. And what Sony found was that their intellectual property had been infringed upon, their music had been infringed upon by a bunch of influencers that were creating content for the Marriott Corporation. And
Yeah.
it was a headline that caught a lot of folks off guard. And as a byproduct of that, we have a client that has asked us to sort of roll out a new fractional copyright trademark infringement product, which we're doing in the coming weeks. So
And I know, I suspect I know who that client is, and yeah, that's a incredibly big, but also shocking, surprising new exposure.
yeah,
One of the things, Fitz, you were touching on it was when I had my company IC PreCheck, and we were focused on doing IC classifications and agent of record services, again, 8, 9 years ago, we had an attorney named Mark Zischoltz,
Mm.
crazy smart employment lawyer guy, really
Hmm.
helped kind of educate me and sort of get me geeked up and excited and passionate, because Mark's a very passionate guy himself,
Hmm.
very passionate about IC compliance. One of the things that he did for me was to do the research and pull some court case, some
Hmm.
decisions that came through where clearly the legislative
Hmm.
rules were independent contractors aren't required to have workers' compensation.
Hmm.
But to your point of everybody's an independent contractor until somebody gets injured on the job, and then they go to court. And the findings were, and this is not how it was written in the finding or
Yeah.
the case, of course, but the general message was, hey, we know you weren't required to have that insurance. We know you didn't have workers'
Yeah.
compensation,
Hmm.
but your client has, and I'm paraphrasing here, your client has the deeper pockets, and you've been severely injured on this job, and there's no recourse for you other than for us to award you this claim. Is that part of the challenge with workers' comp, and have you seen that come to life? And yes, it has the downstream ramifications of misclassification, right? Because the court, if I'm recalling correctly, said, yes, for this purpose, we're going to say you were, in all intents
A
and purposes, an
statutory employee.
employee, a
Yeah.
statutory employee. We're going to award you workers' compensation coverage so that your injuries can be taken care of. And that flows downstream. But are you seeing that in today's market?
Absolutely. Absolutely. And that's such a good point, Michael. I go back to the vendor requirements that enterprise companies have. Workers' comp is there not because a solopreneur is required to have it. It's there because it closes the door on litigation. And the reason why it does that is because when that contractor has their own workers' comp benefits, you know what they don't do? They don't go before the court in precisely the way that you've described and
Yeah.
ask the court to to reclassify the relationship so that they can inure themselves of those benefits
Yeah.
under the enterprise client's policy.
Yeah, no, it's there's so many learnings in the kind of the crossover and the shared space between freelancer insurance and freelancer classification, and with that being kind of the highest growth of our contingent workforce, it's a super important topic, one that I think will only gain more coverage as we go forward, because more and more activities, more and more companies are recognizing the opportunity to leverage independent contractor classified freelancers for a variety of reasons, not just cost, but cost is a big one, and
Mhm.
risk is a big aspect of it as well. Fitz, this has been an enjoyable conversation. I hope there's at least a few people out in the podcast audience that are as passionate and geeky about this kind of thing as we are. Hopefully, the name of the podcast didn't mislead anybody to come into a conversation like this and that you're surprised by it. This is exactly what we want to do on the Future of Compliance podcast. Fitz, thank you so much. Really appreciate your time, your sharing of stories. I love how you tell stories to get your points across. Your knowledge of the space, both insurance technology and freelance management, is unparalleled in my regard. So thank you for carving out some time and sharing your knowledge with us. I want to give you an opportunity to have a final close, but then also tell people how they can get in touch with you if they have interest in connecting with you or pursuing 1099 Policies business.
Well, thank you. And Michael, it's always a pleasure to spend time with you. I'm grateful to have been invited to participate. You know, we're driven by a couple of basic principles, frankly, at 1099. The first is to help our clients do what they want to do in a way that is that provides just a degree of safety, a degree of safe harbor, right? And so that's the context within which we live, we interact with the more traditional understandings of compliance. And we want to be really practical about how we do that. We want to enable the workforce to work. We want to enable our enterprise clients to engage with that workforce that is here to stay and is growing faster than most other channels. We just simply want to contribute by making it a little bit better, a little bit faster, a little bit more cost effective to do. And so in that regard, we're really proud of the work that the team here at 1099 does.
Yeah, and we were right there alongside of you. I mean, that's our objective as well at Bupty, is to create efficiencies, to remove the barriers to engaging freelancers across the globe, to being properly classified, to being properly insured, to being tax compliant. All of that needs to come together for an enterprise to really take full advantage and keep themselves safe and protect their interest when engaging freelance talent across the globe. So super glad that you are part of our ecosystem, our network here at Bupty, and look forward to the launch of that first project. Fitz, close us out by telling people how they can get in touch with you and where you might be in the coming months.
Yeah, sure. So Fitz at 1099policy.com is the easiest way. 1099policy.com, info at 1099policy.com as well. And we typically attend a couple of the trade conferences. And of course, I run into the Bupty team there and many other friends. But the easiest way to reach out is by email. We love what we do, honestly, and we're happy to have just exploratory discussions, even if it is just simply directional guidance that we can share with someone. Some days we plant seeds, and other days we harvest them. We just enjoy having good, smart, honest, interesting discussions. And by all means, anyone who wants to reach out, feel free.
Yeah, I can vouch for Fitz's comments there, because that's how it started with you and me all those years ago. And I'm super appreciative of the continued conversation. Well, this is the end of yet another brilliant Future of Compliance podcast. We're very thankful for Fitz joining us today. And we're also very thankful for you, the listener, who tuned in to listen. And God bless you for hanging out to the very end of what was a very dry conversation in some regards. But if you're part of the audience and you're like me and Fitz, this was gold. And I can't wait to publish it and share it with the rest of our industry. Fitz, thanks again. And everybody have a great afternoon,
An
good
absolute
evening,
pleasure, Michael.
and stay safe. Take care.